So shares of NVIDIA are up about 5% since the company said it expects to resume sales of its AI chips in China. But that might not restart the sales as quickly as some investors are betting on. Christina Partsinevelos has more in today's Tech Check segment. So when can we expect it, Christina?
Well, NVIDIA isn't expecting any meaningful H20 revenue from China until late this year. The company said last week it likely won't see a steady sales cycle for this particular chip, which is geared for China, until after the October quarter. That's because there are still a lot of roadblocks. You have export licenses that haven't been granted just yet. Most earlier orders were canceled, and the company wrote down about $4.5 billion in inventory with very little product ready to actually ship right now. Morgan Stanley notes that even restarting production will take some time, since a lot of the inventory wasn't actually finished chips, it was just work in progress, WIP. And NVIDIA's supply chain takes roughly 9 months from wafer to the actual system that they can sell to customers. And so here's what that means. Don't expect the H20 chips, those again for China, to contribute anything this quarter. 0 in July, according to Piper Sandler, and only limited upside next quarter as the company ramps supply and reconnects with customers in China. Longer term, though, NVIDIA does expect China revenue to recover, potentially contributing anywhere between $10 and $15 billion annually. That stat is according to Bernstein, and making up a low teens percentage of total sale. But that's likely lower than some of the earlier projections of $20 billion, which now look overly optimistic given that longer time frame and regaining those customer orders. And the landscape is already shifting. NVIDIA's newer RTX chips built on their Blackwell architecture, which is the latest architecture, are expected to gain traction in China over time. These aren't direct replacements for the H20 chips, but they're more affordable, export-compliant GPUs designed specifically for graphics and video workloads, according to NVIDIA's CFO. And that could really speed up the transition away from copper, the H20s, and really complicate the revenue mix further. Bottom line, though, that's all confusing. China rebound is coming, but investors shouldn't really count on it showing up in the numbers until late this year, Q4 at best, Carl.
The majority of us have heard about businesses valued at billions of dollars. Trillions, though? The average person can't even begin to understand that quantity. However, one of Silicon Valley's brightest lights, the semiconductor company NVIDIA, has risen to $4 trillion, surpassing $1 trillion and becoming the first to do so. Given the company's enormous valuation, what does this signify for the typical investor? Does the stock price and potential earnings reflect this? Here are the opinions of financial professionals for those who are unsure about whether to purchase now or hold off. The stock price must be ridiculous given its $4 trillion market capitalization, right? Not precisely. As of July 21, 2025, its stock price is about $170 per share, which is significantly less than that of rivals like Microsoft Corp., whose stock is currently trading at about $504 per share. According to finance expert and investor Pedro David Espinoza, people mistake market capitalization for value. Rather, he claimed, price is driven by narrative, momentum, and emotion. Market capitalization merely reflects the current sentiment of the masses, does not imply that it is long-term worthwhile. John Murillo, Chief Business Officer of B2 Broker, a global provider of fintech solutions for financial institutions, said that NVIDIA's proprietary technology, impressive patent portfolio, which includes thousands of patents, and some astute partnerships are clearly making waves in the AI chip market. I generally agree that government AI infrastructure will generate a healthy $50 billion in revenue annually, he added. Is it ever better or worse to buy? According to Espinoza, it depends on your attitude. You are placing a wager on vision if you are long-term. You are placing a wager on headlines if you are short-term. When you trust the story and can handle the ups and downs, that's the right time. Murillo cautioned that a corporation investing heavily in a new technology is constantly concerned about volatility. According to him, a 20% reduction in stock price might result from a simple 10% drop in growth forecasts. When NVIDIA was trading for about $100 a share in April, I pointed out that it was one of 2 tech stocks that appeared unexpectedly inexpensive. A few months later, the chip supplier's stock is worth $173, surpassing $4.2 trillion in market capitalization, making it the world's most valuable publicly traded corporation. Let's examine NVIDIA's most recent earnings, management's outlook, and if the company is still a good investment now, given that shares are close to all-time highs. Unprecedented growth enabled NVIDIA's explosive ascent, as demonstrated by the company's fiscal Q1 2026 numbers. Revenue for the corporation was $44.1 billion, rising 12% from quarter to quarter and 69% from year to year. Its data center division was the high point, generating $39.1 billion in revenue on its own, thanks to ongoing demand from cloud service providers, governmental organizations, and businesses establishing artificial intelligence (AI) infrastructure. During the results call, CEO Jensen Huang was direct. According to him, U.S. industry is essentially shut out of the $50 billion China market. It only helps Chinese chipmakers overseas and hurts America's standing when we protect them from competition. So, what implications does this have for NVIDIA's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on NVIDIA stock in the comments. Your support truly helps us grow. Now, let's get back to the video. However, NVIDIA just disclosed that it is actively pursuing authorization to start selling H20 in China again. According to the corporation, U.S. officials promised to grant the required licenses, and shipments are anticipated to start soon. Hong reaffirmed NVIDIA's intentions to increase U.S.-based investment as part of the deal, which include increasing manufacturing operations, creating jobs, and strengthening domestic AI infrastructure. As of right now, Huang and NVIDIA seem to be surviving the geopolitical upheaval with little long-term harm. Shares increased 4% after the announcement, indicating that investors are hopeful that the worst may be behind them. Additionally, NVIDIA had originally projected $45 billion in sales for the second quarter, with export restrictions responsible for an $8 billion shortfall. Now that those restrictions have been removed, even though it is late in its fiscal second quarter, those numbers might do even better. NVIDIA recorded a staggering $53.7 billion in cash and marketable securities in its most recent quarter, up 71% from $31.4 billion in the same period last year. During the quarter, that cash produced $515 million in interest revenue, which was more than twice as much as the $244 million in dividends distributed. NVIDIA's management obviously prefers share repurchases as its main way to distribute capital to shareholders, as evidenced by the company's meager 0.02% dividend yield. The corporation repurchased $14.1 billion worth of stock in the first quarter of its fiscal year, up from $7.7 billion in the same period last year. Even if that amount is small in comparison to NVIDIA's $4.2 trillion market capitalization, it nevertheless shows that management believes the firm will be valuable in the long run, despite its remarkable stock price spike. Additionally, by reducing the overall number of shares, which NVIDIA reduced by 2% over the previous 3 years, share repurchases increase the value of current holdings. With a premium of almost 40 times forward earnings, NVIDIA's stock is no longer the steal it was only a few months prior. However, value by itself doesn't provide a complete picture. With every new product cycle, NVIDIA solidifies its position as the clear leader in AI computing. Look no farther than tech behemoths Amazon, Apple, Meta Platforms, and Microsoft to get an idea of how much money businesses are spending on AI. They are predicted to spend at least $320 billion on technology, including data centers, in 2025, up from $230 billion in 2024. Hong emphasized NVIDIA's increasing dominance in AI computing, referring to this period as the next industrial revolution. The company keeps pushing the envelope of innovation, most recently with the introduction of its Blackwell NVL72 AI supercomputer, a thinking machine designed for sophisticated reasoning that is currently being produced on a large scale. NVIDIA has undoubtedly positioned itself at the vanguard of this transformation, but given the recent spike in its stock price, some investors may decide to wait for a correction before making an investment. A more methodical technique, such dollar-cost averaging, might be a wise way for long-term investors to get exposure to one of the most significant firms shaping the technological future. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.